So there's a couple ways you can look to add size to a position, and we're going to talk about the first way now. This is going to be very tight invalidation levels. So let's say right here on Bitcoin, and I'm going to talk about shorts more so because I like to use shorts with leverage, and then if I'm in a long, I usually just use spot position. So you're going to see me talk more about shorts because that's what I use leverage on. So let's just say I'm going to short here on this rejection. Now, this doesn't mean this is an actual short setup. Everything here is going to be hypothetical, and I'm going to explain how I can get into sizable positions. So first off is close invalidation level. All right, if I have a close invalidation level, I can get into a large position. Now, sometimes it's more risky than others. So we're going to talk about when it's more risky, less risky, et cetera, et cetera. So if I'm going to get into this position here, it's kind of risky. I've got a straight shot up, maybe a rejection, but it could still keep going higher, yada, yada, yada. Now, if I'm going to get in later on and be more patient and wait for a rejection, that becomes less risky. So you can see here I have a potential double top. So if I want to get in here on this series of rejections, I can get in. We've already been rejected twice now by resistance. So it's safe to say that this could be a potential rejection, or even if I wait for this third touch and rejection, you could see how I'm waiting for more confirmations. And the more confirmations I have, the less risky it is for me to get into a position. So now maybe I have a confirmation on OBV showing bearish divergence, right? So if price is going up and OBV is going down, I'm going to have more of a confirmation here. And you can actually see here that we had price going up here and OBV going down. So that would have been an extra confirmation to add to my, excuse me. So that would have been an extra confirmation to add to my short logic here and my criteria, which would give me a tighter invalidation point. Now, if I didn't have bearish divergence, if this closed above here and it wasn't a double top potential, it would be more risky to get that entry, and I wouldn't have as many confirmations, so I would have to go a smaller position. And why is that? Well, you see here, if I have these multiple rejections, I don't want to see price go above that level, because the more rejections you have, then the more likely price is going to break out hard if it breaks out. So you could see here we have, on this resistance here, and you might not agree with my trend line here, but it's neither here nor there. Let's just say we have 1 touch, 2 touch, 3 touches, 4 touches. This is a fake out, okay? Now we have 5 touches, 6 touches, and the 7th touch is now a breakout. So we have 7 touches on this trend line. The breakout's probably going to be pretty hard, all right? And this is some like free extra education for you guys. I hope that you enjoy it. And here you can see a nice, strong breakout, all right? So if we break through this, it's probably going to be a strong breakout, meaning I can't, meaning that if I want to go large here, I need a tight invalidation level, because there's no reason for me to put a very wide stop loss here. Let's just say my target's down here at support, okay? There's no reason for me to put a wide stop loss, because I know if this breaks out, it's going to pop, and I don't know how high it's going to pop to. So I would say, all right, I really don't want to see price go above this wick. I've now got a 0.24% risk on this trade, so I can get a decently sized position rather than having a 1 or a 2% trade or whatever, because remember, if I have a 1% risk with 10x leverage, that is 10% on that position. With 100x leverage, that's 100% on the position. So if I was in a 100x leverage trade here, I would actually get liquidated with this stop loss. Now, if I put it tight and I get a good entry, now I'd only be a 20% risk on 100x leverage or a 2% risk on a 10x leverage, okay? So you can see how I'm managing my risk in this way. And really, excuse me, sorry. And really, I'll start back at that part. All right. And really, I would like to see this position go in my favor rather quickly, or I'd probably just get out of it at a smaller loss anyway. So number one way to add size to a position or to get in a large size position is a very close invalidation level. Now, if you're newer to trading, you might need to reduce your position size and widen your stop losses, because a lot of you are going to get wicked out on these trades if you're going a very tight invalidation level. So practice, practice, practice. Practice makes perfect. I've done this for a long time on these lower time frames, so I've gotten a lot of experience with avoiding these stop hunts and kind of waiting for that stop hunt to happen before I get in. Bam, there's one way. Damn, I should have taken that short though. Although I almost did, but I was already in an FTM short, so and FTM's looking nice, baby. Keep dumping. I asked somebody asked if I was wrecked, and I looked at the short at my position because I was like, shit, am I underwater? I was down 1.6% on my short, and now I'm up 6%. So that's just funny. I was literally down 1.6%. Like, what the fuck is wrong with people? It's so funny. Okay. Anyway, so let me go back to Bitcoin chart. Okay, that was my little rant. Give you some fun. All right. Adding size part 2. So there's another way you can add size, and this is when you have a little less confirmation. It's more risky entries. So you're kind of guessing a little bit, and you don't want to be adding size in the wrong way, like I mentioned earlier. So the wrong way to add size for me is to add size to a losing position. All right. So let's just say I want to short here. All right. And I'm going to short here, and I've got my invalidation right here above this wick, kind of like this previous trade. All right. And let's just say I do kind of a small size, maybe like a fourth of the size I want to, or maybe half size. All right. And I go a little bit smaller because I'm like, oh, I don't feel too confident about it, but that's fine. And instead of closing this on invalidation, I'm like, oh, I went smaller. I'll just, add to this. And I add. And now I'm underwater, and I keep adding, and I keep adding, and I keep adding. And I'm like, oh, okay, this is my last add. If I add here, if it doesn't work out, then I'm going to have to close, right? And my average entry is now like down here. So I'm like, if I can get back to break even, I'll close. All right. Well, I just added. I kept adding at the top of this candle and added at the top of this candle. And now my average entry is way up higher. And my risk to reward is all skewed as hell because now my reward was 3.5 and my risk is now 5.5, which is an inverse correlation, which you don't want. You always want your risk to be less than your reward. All right. By at least half, if not more. And of course, I do have videos on that in this series. So what happens is you just keep getting underwater and you're like, oh, I don't want to close this. And then you're like, don't know what to do because you broke your plan. You killed your strategy. And now you're kind of like helpless. And now you've got too large of a position with too wide of a stop loss. Because even from my average entry now, I'm down 3%, which on 100x leverage, if I'm using margin trading from PrimeXBT, that's going to be 30% down on that position. All right. Which I don't want to see. So how could I add size the right way, right? How could I do that appropriately so I'm not just getting huge underwater and then I'm kind of just stuck and I don't know what to do? All right, hold on. I gave a nice pause for you that time. Okay. This is nice quick video. People are going to love this. All right. So how do I do it the right way? Wait, no. So I'm going to show you how to add size the right way. All right. So let's get it here. So let's say that I want to add, let me show you one that's not going to work out as well, and I'll show you one that will work out as well. So let's say I've got this rejection here, and I'm waiting for a little confirmation. So I've got that rejection, and I want to see it close above this to invalidate my rejection. Well, you could see here, I apologize, let me zoom in, that we got one wick above and another wick above, and I'm going to say, okay, this is rejecting. I'm going to go ahead and get in. Do I have more confirmations here? No, I don't have an extra confirmation here. So I'm not as confident as I would be on the short that I showed at the beginning of the video. So rather than go full size, yes, my invalidation is going to be close. Okay. So my invalidation is going to be 0.8%. That's still a little bit, we'll go, let's say we get entry red as it rejects here. So yeah, about 0.9%. That's still more than I'd like to have, on a large entry. We could sneak it a little bit more here. Okay. And so the other end, I could sneak it down here to keep it tighter, but my risk is going to be higher of getting stopped out. So I'm going to put it back above this wick, just like we did on the first trade. Again, now 100x position, that's going to be a 70% stop loss, which is basically liquidation level. All right. So I can't go a large position here, but I could add size on confirmation. So what I'm going to do is And again, I'm not going to do it on every trade, but if I start to feel confident about a position, I can start adding size on the way down or while I'm in profit. And now if you're longing, you can use these strategies the same way, just inverse them, okay? Again, I'm going over shorting here. But if I'm shorting here and I want to add on confirmation, so my initial entry's here, all right? And personally, for me, I wouldn't have added here because I'm not seeing an increasing sell volume, okay? You could see that. Declining sell volume, I would want to see increasing sell volume. But if I felt confident about this, my initial entry's here. I could maybe add a little bit here on this drop. Okay, so I add a little bit here. That moves my average entry down to here now. And if I really feel good about it, maybe I add a little bit more here. That moves my average entry down to here. Okay, now my stop loss from average entry would now be 1.1%. I can't have that. So what am I doing? Well, at this point, my stop loss is tightening as well. So my stop loss is either coming just above that resistance to give me a 0.46% risk. But honestly, for me personally, I'm going to cut at break even at this point. Hold on, my ear itches. Okay. All right. I'm going to cut at break even at this point. So now, if this starts going against me, I can just get out of this trade basically scot-free. So my average entry has now come down a little bit. It's a little bit lower from my original entry. And now you can see this trade goes against me. And right here, I'm immediately just going to be like, nope, I'm cutting. So I cut it here. I'm out at break even. No harm, no foul. Maybe a small loss in fees. Maybe when this starts bouncing up here, I just close because I don't feel like the trade's working out. And I move on to the next. So it's a very small loss. I added on the way down, which dollar cost averaged me a little bit lower. But then I could just cut it because I'm still in profit. I was in profit. If you see here, I'm in profit the whole time, right? Because I'm just adding on the way down, which is lowering my average cost, but it's also meaning that I'm already in profit. So I really technically shouldn't be able to lose, or I can't lose if I don't allow myself. And I could literally just put a stop loss at my average entry. And if it gets hit, it gets hit, right? Or I can do it manually. So how would we do that here where it actually works out? Okay. So let's just say that I've got this big pop here. There's probably a resistance over here because we want to be shorting at resistance. All right. So we get this pop here and I say, you know what? I think this is just a fake out and we're just going to say that there's a resistance up here, over here. Okay. And this rejected at resistance. And I'm going to say, you know what? I think this was a FOMO pop. I think we're going to sell off here. And I can go, all right, I'm going to get in up here. So if we don't continue. So I'm going to say we get this pop here. If we don't continue immediately, I'm going to go ahead and short. So we get this pop. We kind of sit here and we start dropping. So I'm going to get in. Okay. So here's my first entry. My stop loss is going to be just above this candle wick again, or maybe even tighter. Okay. Just depends. I'll put it above this candle wick and I'm going to have my target at the 99 SMA. All right. Let's see how low we went. So that's perfect. So we're going to hit my target. Okay. And so now I'm in profit and I could just sit here and let this trade go. All right. But I didn't get much size because look at my stop loss. My stop loss was really high. So I'm going to say, all right, we rejected again. And on this second rejection, I might say, okay, I want to add a little bit. So that's going to add, I'm going to double down. So that's going to move my average entry lower. And I'm going to say, all right, I'm going to put my stop loss just above this wick here to reduce my risk. And I'm going to move this here. Okay. So that's still keeping the same amount of risk I just had because my stop loss was a little over 1%. Now it's 0.6%. So it's cut in half. My distance is cut in half. My size increased by double, but my risk is still the same. Okay. And then so now let's just say, you know what? I'm like, dang, this could actually really sell off. I'm going to add a little bit more right here. So add a little bit again. And I'm going to say, I want this just to go straight down now in my favor. So my average entry is here. I'm going to say, you know what? I'm just going to put my stop loss here now. Okay. And so as you can see, my risk is reducing as I'm averaging in. All right. Because my stop loss is coming closer. It's coming tighter. And maybe, you know what? I'm going to be like, all right, I got a big entry here. I just want to see this go down now. I want to see this dump. All right. And so I got a nice big entry. I like tripled down here. I'm like, I think this is just going to go straight down. Okay. So now it goes straight down. Bam. Nice profit already. And what I can do is I can take like partial profit. Okay. Now what I need to do is I'm in a very large position. My risk is very low already. I cannot let this go back against me and I cannot let this go shoot up here and then be like, oh, shoot, what do I do? Because I'm going to be very heavily underwater. So now I'm loaded in a heavy position. I'm in a great position here because I'm already in profit. I cannot let myself lose this trade now. So there's multiple ways I can manage this. I can take 50% profit down here. I can take 25% profit, all right? And when I see momentum stall when I'm in a heavy position, I'm going to take a little bit of profit, okay? So this goes down here and it starts to get bought back. I'm probably going to close at least 25%, okay? Just to be safe, because if I get stopped out at break even, I made a little bit of profit now. And if I'm in a large position, that little bit of profit still might be a decent amount, all right? And then so now it keeps going down. I can just keep trailing my stop loss now into profit. So my average entry is up here, and now my stop loss is just going to keep carrying down. Now, could I keep adding here? Sure. I'm already in heavy I've already gotten a large size up high. I don't like to add too much lower because you can get rebounds. So if I added here, down here, whoops, sorry. So if I added down here, that would move my average entry way lower. And then I have to consider if I want to be underwater for a minute or not, for a couple minutes or 15 minutes or whatever, right? I don't like to be underwater for very long if I'm in a large position, if at all. So to me, I'm just going to keep my invalidation close. I want to play this momentum. I want price to drop quickly. And every time price starts to rebound, I'm just going to shave a little bit of profit off. And you can see when it hits my target, I'm just going to either fully close the position or maybe keep like 10% open. All right. So when you're trading with leverage and you're adding size, you need to be very aware of your risk and your risk potential. And if you don't have confirmations like I didn't have here, I cannot go full size, because if I do that, let's just say I did that here, I would be wrecked on this next candle, right? Here, this candle could have shot and launched off and screwed me over, and it could just, when you have this strong momentum, you can see that momentum carry. So I didn't have confirmations. I have to start small, and then I can add on the way down if momentum goes in the direction I want. And also here you can see I've got start to get increasing seller volume as well, so that's a good sign. Some nice increasing seller volume. So, hold on, I need to recap. So just to recap, the one way you can add size. Oh, hold on. So let's recap real quick. The first way you can add size is close invalidation level. Second way you can add size is by starting small and adding to a winning position. Right? So you're always in profit and you're always winning on the house. So the biggest no-no for me is to add to a losing position. It's very easy to get underwater quickly. It's very easy to see momentum just skyrocket up. Immediately you're at a large loss or you're close to liquidation level and you're sweating and you don't know what to do because you didn't really have a plan. You overexposed yourself and gave the market too much room to expose you. Bam. I think that's pretty good. Okay, all done.